Hey guys, I'm Blake Henderson. I'm the Ecosystem Programs Lead for 0x and wanted to welcome you this afternoon to a panel on market making on decentralized exchange. I have the privilege of introducing you to Alan Gall, who is the head of business at Pricto, which is a market making firm that has expertise in decentralized exchange. Carson Cook, who is the CEO of Fractal, which is another market making firm with expertise in decentralized exchange. And Michael Fang from Coin Alpha, a company that's building open source market making tools for decentralized exchange. So wanted to kick us off by just a quick fun intro question. Alan, what is the first trade that you personally made on a decentralized exchange?
First trade I made. I think I was testing out Kyber Network, and it just launched, just playing around with it. What was it? I don't remember which token, but just bought it and bought right back into Ether.
Yep.
That was pretty much it, just to see that it works.
Cool. Carson?
I'm pretty sure it was an ETH DAI trade on 0x. At least that's the first one. We're good? Okay. ETH DAI trade on 0x. That was the first one where I actually knew what I was doing. I think I'd played around with Uniswap before that and wasn't quite sure if I'd succeeded or
not. I think that's a trick question, Blake, because my first trade on DEX was participating in the 0x ICO, which I believe used your protocol.
Okay, awesome. Well, wanted to kick it off with something fun, but wanted to dive right into something more meaty after that. As you guys know, market making crypto assets on centralized exchanges is already complex. You guys have chosen to go beyond market making assets on centralized exchange to decentralized exchange, which is even more complex. That takes strategic initiative on your side. You have a vision of what you're going after there. So wanted to learn a little bit more about the strategic decision to start market making or building tools for market makers on decentralized exchange. Michael, do you want to start us off?
Yeah, I'd love to. So, for us, we run Quant Fund. We trade on centralized exchanges.
But the more we dug into it, the more we saw that the real need from the DEX side was to get liquidity. But liquidity is like a chicken egg problem, right? So unless you have it, you don't have it. So when we first did Hummingbot, our first strategy was one where you could make a market on a DEX, like 0x, and you could simultaneously hedge your exposure on Binance or another centralized exchange. And so we felt that this is a very common market-making strategy, as these guys would attest, but we felt that it would make it safe for the average person to make a market on a DEX, but still be protected because every trade they do on the DEX is hedged on a centralized exchange. And right now we're kind of about to launch a marketplace for market making that allows individual market makers to basically serve a bunch of different projects via our marketplace. And the reason we want to support 0x Mesh as well as centralized exchanges is because our main customer is a token issuer. And there are big token issuers and there are small token issuers. And for the small guys, and these are founders who are trying to do the right thing, but maybe say one person or two people who don't have access to regular capital markets. For them, exchanges like Bamboo Relay or Radar Relay are really their only option. And we believe that they should also have the right to go public on those capital markets and incentivize liquidity from their community instead of having to hire a hedge fund.
Interesting point. Carson?
Yeah, so I think there's really two reasons why we decided to focus on DEX market making, which, as Blake said, is much more complicated than centralized exchange market making. First thing is that we just believe in DEX trading. If you look at what's happening on blockchain, what it enables you to do, you can have store of value in tokens, you can send tokens peer-to-peer on the blockchain. It doesn't make any sense to not have peer-to-peer trading of those assets on blockchain. So if we think the future is truly decentralized, then it doesn't make sense for trading to be restricted to centralized exchanges, and we're fully behind a future that is decentralized trading. Second, as a team, we're a very technical heavy team, and we really like solving technical challenges, and we thought this was a really good strategic fit to our core competencies. I think we're kind of in a spot, I think all three of us on the couch here, where we're kind of getting out ahead of competition, which isn't really there yet, in that the DRWs and the jumps of the world are not really paying attention to this yet, because the flow and the trade volume in the space is on centralized exchanges, and OTC style trading. So there's really no reason for them to take this much more technically challenging problem and go after it yet. And all of us are positioning ourselves to be ready prior to that competition arriving, and also we'll be ready once the actual trading activity picks up and the takers come.
Yeah, I'd have to agree. So first thing, there's bigger spreads, and there's you can capture a bigger chunk of the market right now on DEXs, even though still today in 2020, most of the volume is still on centralized exchanges for now. But more importantly, yeah, we see it as an extension. Like the reason we trade on DEXs is the same reason we believe in cryptocurrencies to begin with. A future that's more decentralized, more open, more transparent, with more personal sovereignty and personal liberty. So it's a natural extension to the cryptocurrency vision. It's been talked about and discussed since before Bitcoin happened, and yeah, we believe it's the future.
Awesome. Thanks for the explanation there. And talking through that complexity on DEX, one of the things that causes that complexity is that there are multiple DEX models today. So if you're choosing to market make across decentralized exchange, you might choose multiple of those models to market make across, which means that you might have multiple different technical infrastructures that you're working with. What can you share about the pros and cons of the various DEX models that you've personally interacted with? Carson, let's start off with you.
Sure. So as you kind of alluded to, it's not like a one-size-fits-all here. We actually think of this all as like a huge spectrum from fully decentralized trading to fully centralized trading. And there's a lot of hybrid models in between. So you can have things that are like bring your own wallet with a centralized order book. That kind of fits somewhere in between. You've got things like OTC execution layers that plug into custodians, whether those are big institutional custodians or, again, some sort of a self-custody model. And all of these things, from like a API connectivity and whether you're interacting with the blockchain and paying miner fees, or if you're going directly to a trusted third party, there's a lot of trade-offs you have to consider. There's a lot we could go into, but I would say fundamentally, the couple things that we always think about are the orders on-chain or not? And rather than getting into all of the details with 0x of like whether it's on-chain versus what matters to us as market maker is, do we have to send basically some sort of an order, a cancellation order on-chain that requires paying fees? That's critical. Everyone at the couch knows it, but it's probably not obvious to you if you're not doing this day in, day out. Cancellation fees are a huge thing for market makers, because anytime that the market moves, you need to cancel and replace the orders to where the market now is. So because of that, we kind of think of, okay, well, if it's on-chain orders, you have to deal with cancellation fees, paying miner gas fees. That's something you can manage with. And by the way, we prefer that. There's ways that you can kind of optimize that versus off-chain orders, where now all of a sudden you're trusting some third party. And again, like I kind of mentioned earlier, we don't think that that's going to be the model for too much longer into the future.
Yeah, so I think these guys can really speak to like the details from a market maker perspective, because I worked in finance before. Maybe I can shed some light on like how this works in regular finance. And I think what's interesting is that there are 3 different overall types of markets. There are order book markets, request for quote markets, RFQ, and there's automatic market makers, or AMMs. And if you look at the types of assets that trade on these exchanges in fiat, it kind of gives you a sense for what they're for. So RFQ markets are for large trades. So the OTC market is all RFQ. Order book markets are great for assets with high price discovery. So this is like Bitcoin or Ethereum and so forth. And then AMMs are great for long tail markets. So things where a market maker it's really hard. There's some assets that is really hard for a market maker to make a market on. So for instance, ICE structured catastrophe bonds, which are bonds where it's like you get pays if, let's say, an earthquake happens. And as a market maker, I can tell you it's really hard to price that risk because we have no idea. And so that's why in fiat, AMMs are used heavily for those catastrophe bond markets and these markets where market makers don't want to play. So I think the same thing is happening in crypto. Right now, like Uniswap and AMMs are used for everything, but I think in the future it's really the long tail markets that they're great for, and for assets with higher price discovery, like ETH DAI, ETH, Tether, that's where the market makers, like these guys and our users, are really playing.
Alan, do you have more thoughts there?
Yeah. So first, I want to reiterate that there's no that it's all a different trade-offs and different security assumptions. So Kyber network is generally I would say the strictest. Everything is on chain, so cancellations cost gas, and it's inherently slower, so the spreads are going to be bigger. Then there's Uniswap, which is pretty limited with the strategy, which is only inventory-based strategies. 0x is offloading some of the risks to relayers, which has an added security assumption, but allows for a far faster trading. Cancellations are free, and it can allow for much better pricing. I'd also say that there's a lot of improvements that can still be made simply by technology with very little compromises and very little added assumptions. And we're really looking forward to a lot of it. We're very excited about the coordinator model with 0x. I think it's the next step in the evolution of DEXs, and yeah, it's going to be an exciting year.
Cool. Michael, you were talking a little bit more about there being different models for different types of assets. One of the reasons why decentralized exchange is exciting is that there are a huge amount of assets that don't currently trade on centralized exchanges today, crypto assets that don't currently trade on centralized exchanges. What unique DEX asset types are you most interested in?
Yeah, well, I think it's interesting because we make market making software, and we've had a lot of different asset issuers come to us, stablecoin issuers, NFTs, prediction markets, and so forth. To me, actually, I think the most interesting thing is actually what Joey said in the last presentation, which is sports betting. I think there's a huge opportunity to basically make and take sports bets in a decentralized way, because it's actually interesting because sports betting markets are very similar to all stock markets, crypto markets, and everything. And the same problems exist where people need to make and people need to take. And I think enabling that in a DEX context to me just makes a lot of sense.
Makes total sense. Alan, do you have some thoughts on that? Other assets that you're excited about that are natively DEX right now?
We're very excited about everything synthetic. So obviously, DAI, a synthetic stablecoin, but everything derivatives, longs, shorts, futures, price following tokens. I think it's a perfect fit for the blockchain medium. It's perfectly enforceable simply by using a blockchain transaction, and we're looking forward to see how it grows and evolves, and especially the new kinds of synthetic assets that are going to be enabled by DEXs.
So definitely echo what both of them said, but specifically, Alan, when you were talking about futures and other derivatives, I think that's going to be huge. I think we're still 1 to 2 years out probably from those getting really big, just because you need the other side of those markets, and it takes a while to stand up. I think the futures market is starting to develop, and then once we get through that, hopefully we'll get a really robust derivatives market, and we're really excited about that. A few other maybe slightly more exotic things we're interested in. We've been, NFTs has been thrown around here, non-fungible tokens and other collectibles. We think that's really interesting, especially from a market maker perspective, where the supplies of these things can either be limited, much harder to manage inventory of, or even unique and a single one. In-game items and loot, I think, is going to be huge. I would agree with, I think it was it Warren's discussion this morning on that. I think that's going to be very large down the road. I think data and privacy tokens for individuals and institutions is going to get very large, and it might sound weird that I'm talking about trading that, but the way I think a market maker steps in is you're sort of if I all of a sudden want to open up to Facebook or company ABC some of my personal privacy or my internet identity, you'll kind of need someone to then be able to move that token over to them so they can do whatever data analysis you approved them to have access to. And then if you're paid in ETH or something, you'll need someone like one of us, a market maker, sort of sitting in between in order to do that. I think that's going to be large. And then maybe the last thing, I think prediction markets are big. The Augur talk was great. And also real estate, and in particular virtual and augmented reality property rights that are tied to physical locations. I think that's going to be huge once we get that on blockchain.
Looks like a bright future of a lot of different tokens that are available for these markets. Looking towards the future again, what important new trend in decentralized exchange do you think we'd be talking about if we were sitting on this couch in a year? Sure. Michael?
Well, I think it's going to be what we're doing with liquidity mining, frankly, because I think for those of you who don't know, market making has always been this thing where you have to hire someone to do it. And I would say even for the market makers around this table, it's like it's a pain in the ass negotiating these contracts with issuers, especially when they're being promised all these things by other firms that are just completely astronomical. Like they'll support your price or they'll create all this wash trading. And I think we have a huge chance to standardize this industry, to create a lot of transparency around a system that's actually measuring the benefit that we're delivering to companies and issuers, which is reducing slippage. And I think, unfortunately, there's been so much kind of, FUD around volume and wash trading and all these things that, frankly, have nothing to do with liquidity. And what we're trying to do is essentially create a system that just allows people to transact, to know exactly what they're paying for, and for market makers to know exactly how much they're earning in terms of rewards, and they can do it across all projects instead of having to, sign contracts and try to educate people. So we're hopeful that this year we'll really educate the market on how this all works. And by the end of the year, people are earning money, whether it's market makers or individuals from doing this. And for the folks, tokens projects, whether it's a small project or a large project, you can always get liquidity.
Very cool. Carson, do you have thoughts?
Yeah, I think there's a couple spheres that this will fall into. I think one is actually the derivatives and futures, and I know I said this is like 2 years out, but I think a year from now where the tech is going to be stood up, there's just not going to be huge adoption until people get comfortable. You can think about how opaque a lot of this stuff is, whether you're even on a centralized exchange. You could argue to a lot of users this is relatively opaque. Decentralized trading, if you haven't invested your life like the three of us have here to understanding it, there's a lot to figure out. Now all of a sudden you get to derivatives and futures and you have all that complexity added in. So I think the rails, like the smart contract, is like the perfect embodiment of a derivative to an asset on chain. So I think that it's going to be there. We just won't be, there won't be huge trading volume through it yet. And then I think the other piece, this is a little more subtle, are things like prime brokerage and clearing and netting, but on chain in a decentralized way. And you might say like, well, why do you need that? There's still a huge capital efficiency concern with all of this of there's real fragmentation even on these the point of this should be that there isn't fragmentation, but there is, and there's ways you could chain together smart contracts in ways that make you much more efficient, and there's also things you could do with sort of using people's idle funds that are sort of scattered across the chain in order to kind of pipe it into market makers or other people that can use it and give them some yield along with the market maker.
Yeah, I think the upcoming theme is going to be the interoperability of the different protocols. The inherent advantage of the DeFi space is that you hold your own funds, you keep your own keys, and we're already starting to see how the same funds that you make interest on Compound, you can trade and you can leverage, and the way these things play out and operate together are going to be a major differentiator over traditional markets. And yeah, I think this is where the inherent advantage is going to come from.
Got it. We've talked about a few of the unique challenges about decentralized market making right now versus market making on a centralized exchange. I'm wondering what you guys are most hopeful will be changing in the coming year around some of those difficulties that you currently face and potentially affect the pricing or availability of assets through your infrastructure today. I'm going to start with you, Alan.
I think the biggest technical challenge is the finality of trades. When someone lifts one of our orders, we still have to wait sometimes a block, sometimes 2 blocks, just to have certainty that the order has been made. And there's different probabilistic models to deal with that, but the more certainty you have, the tighter you can make your spreads, the better pricing you can provide. So improvements on that are going to be a big win for us.
I would say kind of like a way to get the benefits of the open order book model while still allowing market makers to be able to cancel orders without paying fees. because I think there's a lot, everyone sees the benefits of open order book, right? Like, it doesn't make sense for order books to be siloed across the landscape when everyone just wants to trade a single place. But I think the difficulty is, if the order book is off-chain, how do you allow kind of like trustlessness, open access, but still allow market makers to be able to cancel orders, or at least like not have to pay money every single time we're basically placing orders. And I know Xerox has put a ton of thought into this with the coordinator and mesh and so forth. And I'm hopeful that by the end of the year we'll find the right solution.
Definitely echo both of those things. Just to layer on one thing to what Alan said, because I would totally agree with that. The finality thing is very challenging for a market maker. When can you book that trade actually happened? And it's an interesting problem because it's actually that we go too fast, which is sort of counterintuitive. But traditional trading, you had execution, clearing, and settlement, and you could set it as soon as you had execution, which is just agreed upon terms, you could book it. You actually don't care if it changes hands. Because execution, there's basically no clearing really here. I mean, you could say that the smart contract's coordinating clearing, but you have execution and settlement always happening at once, and that leads to these issues because it's like, great, we kind of agreed on this now, like we're gonna settle right away. And that's a little bit alluding to these things that I think we'll be talking about in a year, where we can get clever about like strategically slowing that down, at least for certain parties on the blockchain, so that we can book it and say, yes, this will happen, but it's gonna move later and in a much more intelligent, netted fashion.
Awesome. With that, I think we're going to jump into our final question. We've seen more volume being traded on decentralized exchanges over the last year as specifically decentralized finance has grown. And we actually see that volumes seem to be continuing to grow this year. It's been a large month for January for decentralized trading. Do you have a prediction related to how much volume will be traded via DEX in 2020? Let's kick it off with Michael.
Thanks for putting me in the spot.
Yeah.
I think volumes are definitely increasing. Obviously, a number like, if I had to guess something like, I think last year I said something like 100 million a day when the same question was asked like at some conference about a year ago. So I'm just gonna repeat that number until it holds true. So I'm gonna say 100 million a day by end of the year. Traded on the DEX, which is actually a small fraction of what's traded every day on central exchanges. Central exchanges do about 20 billion a day. So 100 million isn't that much. But to me, I think the real question is, like, how do you actually get sustainably, where the DEX becomes a first market for an asset instead of the second or third market? And so if you look at how this happens in fiat, it's the first venue where an asset is listed that is typically the leading liquidity venue. So the question we should be asking is, how do we get the next big ERC20 token to list first on Xerox Mesh instead of on Binance?
Very interesting.
Yeah, so I think that's a pretty fair bet. I don't know if I could give a better one. I'm glad you had to go first. I think that I definitely, when I watch the narrow view of like our trading activity, and then when I look at the numbers across the space, I do think it's going to be 10 to 30x what we're seeing right now, even in January with the bump. I think we'll get there within the next year. And I agree, it's very, if we can get people to sort of do their initial listing sort of out there or be there prior to being on the centralized, that will only help things. I think also if the different DApp and token projects can start thinking about how to make things more seamless for their users and get, whether it's 0x Instant or different widgets embedded so that they can hit these order books, even if they don't know that they're hitting an order book, just so that they can acquire the token in a much more seamless fashion. That's really a way to sort of unleash the floodgates once there's some killer apps on Ethereum.
I think the biggest challenge actually for the space is the users. It's still hard to get around managing keys and managing hardware wallets and MetaMask, and this is the biggest challenge, but it takes time, but people learn how to use it, and the user base is growing. I try to avoid predictions, especially about the future, but let's call it 50 million a day.
Awesome. Thank you guys for sharing your expertise about the DEX landscape today, as well as where it's going for the future. Thank you guys for listening.